Amidst a period of relatively high volatility in February, March, and April of this year, the first few days of May have been a little bit different. We've seen volatilities contracted a little bit, price isn't breaching our volatility box ranges as often as we'd expect, and that's forcing us to be not only more patient, but also a little bit creative in terms of opportunities and trade ideas that we may be finding in the marketplace. One of those creative approaches that we have for our Stock Volatility Box members is to play the trending move instead of looking for just the fades. Now, the way we do that is by using the likely trending list that we send to all of our Stock Volatility Box members every night, Monday through Thursday. This contains a list of 3 to 6 stocks usually, which we feel are likely to be trending for the next day, and this is still using a process-driven approach which uses data as its fundamental reasoning for why this trade is valid. So in this video, I'll share not only the trending list for tomorrow, May 6, 2020, but we'll also talk about what is the idea behind this trade, why does it work, and why should you take this trade in terms of common sense and logic. So on our trending list for May 6th, we have a handful of candidates. We have Continental Resources, we have HollyFrontier Corporation, we have Imperial Oil, we have Livongo, we have Cisco, and we have Texas Roadhouse. And these are the 6 candidates in which prices closed inside of any of our volatility box ranges or edge zones, letting us know that either the buyers or sellers had full control of price action today. So here on the right hand side, I have an example of Cisco, and we'll use that before we go into the charts of all of these. So with the open for Cisco, price really just continued to trend downwards for much of the day, right? There was constant selling pressure. There were no buyers that stepped in anywhere inside of our volatility box ranges. And even when price hit it towards the end of the day, we didn't see any sort of pickup, any buyers step in here, any big boys really coming in with serious capital to even bring this move up to our target line, which is that bare minimum move that we would be looking for. So that's clues, that's information that tells us that the selling pressure is real, that tells us that the selling pressure is dominant, and there's a pretty high likelihood that it will continue for the next day. So that now gives us a list of 6 candidates that we know that, hey, we can expect price to continue to trend in the same direction that it was trending today if it meets our trigger criteria. Well, what is that trigger criteria? It's quite simple. We wait for price to break outside of our volatility box cloud, so either the upper side or the lower side, which is our SS or LS, long stop or short stop on the dashboard, within the first 15 minutes after price breaks. Why 15 minutes? Well, to me, that's good enough time. If in this case the sellers were really in control, well, in the first 15 minutes, I expect to see you continue to take price down below what was today's volatility box range, letting me know that, hey, you're still going to maintain control and you plan to drive the price down further tomorrow and continue to trend down. And this has happened more often than not where our trending candidates give us some really nice entries and we end up getting stretch targets into the next day's volatility box ranges. So you can imagine how that trade ends up becoming a really nice trade. Now, in terms of stop and targets for that first contract or first batch of shares, before we really know, well, how strong is this trend? Well, that stop for me is at least outside of our long entry, but ideally somewhere in between our long entry and target. And if I can afford so, then I'd like to give it outside of that target room, right? Something like outside of this previous pivot point in Cisco would make a lot of sense and be looking for that same move in the opposite direction in that trending zone for that first target, and then look for stretch targets using our volatility box target lines, the short target line, the short entry line, and the short stop line as your 1, 2, and 3 targets for tomorrow's trading. So with that, let's go into the charts of each of these tickers and we'll quickly cycle through along with giving you the exact price levels that we'd like price to break for each of these candidates. So for those price levels, we'll first pull in the dashboard. And so using our volatility box dashboard here, we can go ahead and put in all of these tickers, right? So we can put in Clear, HFC, IMO, Livongo, Cisco, and Texas Roadhouse. And just like that, we have our levels for all of these. So if we open up the tracker tab, in the case of Clear, we want price to break outside of 13.46, the LS, in the first 15 minutes, which then tells us that the sellers are going to continue to maintain control. HFC, 3106, IMO, 14.93. Livongo, we'd like to see price continue to break above our short stop, which is 43.82, which is currently closed above. But if price continues to open above that, then that's a strong continuation play in Livongo. A little bit different than the rest of the candidates, but a good bullish play to mix things up with bearish and bullish candidates. Cisco, we already covered, but that long stop is 49.87 that we want price to break within the first 15 minutes tomorrow towards the bearish side. And then for Texas Roadhouse, that price is 42.91. And that's it. That's the setup. And for those of you that watch the automated triggers video in which we do some automated trading, you can go ahead and program each of these prices in along with the time criteria if you'd like to have a process-driven but more automated trading approach to try and play some of these trending candidates. Now, if we show you what this looks like on the charts, we'll go through some of these. We already went over Cisco, but now if we go over something like Clear, it should be fairly obvious that all of these have closed inside of our cloud, right? We see that selling pressure continuing, and we'd like to see, we said our assess price, we'd like to see price break outside of this cloud in the first 15 minutes, which we said using our dashboard was 13.46. And if we come to our charts here, we can see that 13.46 takes us exactly outside of the clouds. And so that's how the dashboard and the actual ThinkOrSwim charts overline. They give you the same levels, just one is a lot faster, easier, and just quicker to try and generate those same levels. If we keep going through, we had Texas Roadhouse as well, right? That's how Texas Roadhouse looks. Same, ended inside price. Same thing, price action ended inside of our volatility box clouds. And if we go to Livongo, in the case of Livongo, we'll see price broke outside of the clouds. But really, if we open anywhere above this zone right here, 43.82, well, then we have a pretty strong inclination that Livongo should continue to trend the next day higher, and the buyers have full control here. So that's a quick and easy setup in which we have our likely trending candidates. The setup takes place in the morning hours. First 15 minutes, you already know whether or not you should be participating in any of these trade opportunities. And typically, by the time we're looking at participating in fades, we've already made some money off of these trending candidates. Now, what happens if we gap up? Well, in the case of a gap, you lose the edge. Your stop is now much, much wider. And so those aren't really all that attractive. I'd like to see price systematically just break outside of these levels without having a major gap where it's 2-3%. And that then still gives you an edge, a way to participate in these trending trades while still using a data-driven approach. Hope that video helps, and we'll see you in the next update.